All right. Uh, Welcome to the end of day review for today, August 11, 2023, and it's Friday, the last trading of the week. I think it's the second week of August, and the big week for us is the CBI week. But as long as we see for this week, we don't see the CBI really move much. It keep going to the downtrend, right? So let's look at the weekly time frame. So even though today, this week is, I put a lot of annotation right there. I haven't clear yet, but basically for this week is still a down close candle right there for the week, right? It's the second week of August, and you can see that it filled the fair value gap right here. If we think two candle, it filled it today. So the scenario that we are entertaining right now is next week. After it fill out, it seek the internal liquidity. Let's see, it may rebound from here. In order to rebound from this, I would love to see it open below this candle and then going up. That's the weekly candle right there. So we have 2 week down close. This is the huge down move. So it make this a very it is a valid bearish order block, right? After that block we have boom displacement, and then you see it create a fair value gap right there. Is that fair gap? It's not a or at least it's a implied fair value gap. Basically the implied fair value gap will be the open and close only, doesn't count a week. But for fair value gap you count a week, but imply you don't have to. So that's the weekly. All right, let's look at the monthly. The monthly is kind of interesting, right? It gives us so-called inside bar right here. So next week we'll mark, there are lots of liquidity still up here. If this gonna come down, I would love to see it, go up here and grab buy side liquidity. Then I'm convinced that August will down heavily. But we don't see that, and it did not seek the sell side liquidity neither. You see, it's inside bar right there. So let's see how August gonna play out. But right now the market tells us that is still in the range, right? It's trapped both, right? It trapped the sell side liquidity up here, and it trapped the buy side liquidity. The buy side liquidity up here, and the sell side liquidity down here. So it's not willing to, to take those liquidity. Yes. So in the short scenario, you wanted to go up and wrap the buy side liquidity and go all the way down to wrap the sell side liquidity. In the same token, if you are bullish or want to go long, then you want to see it go and take the sell side liquidity down here, and then boom, go up. All right, that's the weekly and the monthly table. I want to go to 4-hour time frame. We want something very interesting. We want to see how this week is moving. So as you recall, on Monday, right, I believe on Monday or at least on Tuesday, we come out with this scenario, right? We wanted to go up, break this Monday, but hit into this order block and then pull back, right, and then go up here, take the buy sell liquidity here, and then boom, retracement into reversal, come back, right? So it looked like that's exactly what happened, but the level is a little bit low. For this, we stop right here, but in reality, it's go all the way down here. So our scenario that we entertained on Tuesday and update review, it turned out, you know, the overall movement is correct, you know, the ballpark is correct right there, but the detail is just a little bit off right there. It not even go up here at all, it just stop right here at this bearish order block, it not break it. So we learn our lesson, right? So for the bearish scenario, it's not gonna break it. It only break is in the, you know what, in the bullish scenario, it break and retest. But in the bearish scenario, it should be failed, right? So that's the very valuable lesson that we learn from the market, right? So it should be failed. So we should move right here. It fell, right? It fell. Let's go up here. And then this is what happened. It fell. After it fell, it go all the way down here. So that's what happened right there. And then from there it make another leg down right here, right? Little bit of retracement right here. So that's how the real scenario is play out right there. Yeah, we have an idea. So we have so for the bearish, it will not break the order block, the bearish order block. We will pull out, take such a liquidity, and it retrace a little bit, you know, just retest the order block right here also, and then boom, go down, take another such a liquidity. You see how many times it takes such a liquidity? It's 1 time, 2 times, 3 times, 4 times liquidity. That's the reason why when we see the 4 time, we want to go in and go along right there. And amazing, you see the move right here is $3 move right here, 28 cents. If we go along exactly at 9, we will make a we will, you know, we will be on the right for a huge, you know, we will take on the huge, you know, try right there for, you know, $3.28 move right there. And also the reason why I want to take a look at the 5-minute time frame, or at least let's look at the 50-minute time frame. We see that the markets, let me turn off the trade. So right here, when the Thursday right here, right? When what happened? Oh, we make some. We moved something accidentally, I believe. Yeah, I think we moved right here. It should be right here. Yep. So right here on when the new release in 15 minutes, you see this candle right there. So if you are experienced when you trade with the CPI number, you know that the first move is always the setup for the opposite move. So this first move is gonna be the setup to short them. Because look at this candle, it shows you that it is the Dow close candle, right? And it breaks both ends of the London section. Is open right here, and go break the buy side liquidity, and then go wrap the sell side liquidity, and then boom, it go up, it hit into high time frame order block. I think it's 4-hour time frame order block, and boom, it's going down. So it gives you some idea that it's the first move is a setup, basically a fake breakout right there. So you see right there, we put the range right there, right? So as soon we saw it break to the sell side liquidity, then we know that we're gonna short them. Wait for a moment, wait for the right setup. In 15 minutes you don't see the setup, but I think we did talk about that yesterday. In 5 minutes we see very clear setup. Yeah, in 5 minutes you see the clear setup right here. You see order block after the the huge sell side liquidity taken. It gives you a huge signal right there to short them. If you study the markets, the liquidity run carefully, you see huge buy side liquidity clear right there and hit into this order block, and see this order block is validate, is it still hold. You see one test right here, two test right here, and then three tests right there. Boom, it fell. So after the sell side liquidity were clear, so we can confident going and engage short. And before that, we have a lower high, which is so-called sell side liquidity trap right there. So we believe it can go down, boom, and take that. And it did. You see, Wow, so this move give us, this setup give us a lot of, you know, confidence and conviction in this setup. So first you're gonna see this order block right here, right? This, you know, order block right there, right? And then you feel the retest one, retest twice right there. Then we can go in right there. And how much we reach? We only 45 cents. And we know that it's gonna come down and at least clear, you know, trap this sell liquidity. At least it's gonna come down and clear that. So at least we have, you know, in the pockets, how much in the pocket we have for sure? What is this one? Oh no, we don't want the, we don't want a triangle. Oh, we want a trend line, right? So at least for sure, we know the setup $3.25 right there. So we reach only 45 cents, and look, we get $3. So it's like 1 to 6, more than 1 to 6 ratio right there. So whenever you see this setup, right, you see the buy seller here was taken, and before that, the move to take a buy seller, there is a sell liquidity trap, which is a higher low. Then boom, you know they're gonna go check that. Especially it keeps you right here, auto block, and a fair gap. You don't see the fair gap here, so you have to be a little bit take more risk right here. Auto block, it's just a retest. The fair gap is very, yeah, you can see right here, and then right here it's called implied fair gap. You know, it should work for implied fair gap. So right there, you can put your stop up here, so you reach 45 cents right there. Boom, you gotta take your target right there, and you see that it boom retest that bearish breaker, or at least no, the fair value gap right there. If we retest them one more time, here you have a fair value gap right here, right? Bearish breaker, fair value gap, retest, boom, go down one more leg right there, and then it try to recover. So you have 2 legs down right there. Actually, yeah, right here also, boom, almost 3 legs down right there. So that's how we see it play out on the Thursday, the CBI day. Okay, let's look for today. I was in the pre-markets, right? What I see is that, you know, London low will clear, and then go down here, it clear one more, and then it clear one more. This clear, we take out the you know, Friday low right here, right? Yeah, it's clear the London low, but it haven't take out the previous day low. But right here, it take the previous day low, so it take lots of buy sell liquidity out right there. And then at 9:30, right here, 9:30. You see the 9:30, boom. It's just a very long wick to take the buy sell liquidity. right there. So you can go in from here. Can you? If you count this as order block, not so clear. I look at the 1 hour, 1 minute time frame, see if we see why we need to go in there. Yes, so at 1 minute we have a better look at that setup than a 5 minute. So sometimes we alternate between 1 minute and 5 minutes. Which one give us a better setup? Or yeah, a better view of the liquidity run, then we can check. You see this order block at, I think, what the first minute of trading, right at 30, first minute, second minute, 31 right here. You see this order block, and then boom, huge, displacement value gap, and then the retest of that. That's it. You can go in here and take this trade, beautiful right here at 9:46 right here, and if you mix right here, you can treat this at the order block and then a retest right here. You have two time to entry. What a wonderful word is that. The market always reward the patient, right? If you're patient, you can go in this 46 or 52, 6 minutes later. Then you have a huge run right here. From this, let's say you're late into here, you still capture a $3 move right there. And how much you reach? I mean, you reach very little, right? Let's say you want right here, and you want this. You read about 30 cents. Let me, you put a little bit low here, 35, right? 32. Let's say with 5 cents below that. Yeah, 30. So you read, technically you read only 40, right? 43 cents, and you gain how much? You gain $3. So it's almost 1:6 risk to reward ratio right there. So you have a sell-side liquidity clear. And another picture that you want to see is like this, right? You have right here. Let's remove this for now. Too much for now. Let's remove it, right? So here you have buy sell liquidity were trapped, right? And buy sell liquidity, what happened? Come on, man. Okay, and then you have a buy sell liquidity were trapped second time, right? After you have sell side liquidity clear and sell side liquidity clear 2 times, and then retest all about, boom, you go in. It will give you explosive move up right there. That beautiful and very high quality setup right there. See that? That's the beautiful trade. Let's make into our database right here. So you either entry right here 46 or 52. Let denote that. You just need this one trade for the whole week. And you good to go. 09, 52. Yeah, 09, 52. And this order block is 31. It's hard to see. I don't want to spend right here because I want to keep the contact in here. The London low and prior day low were taken right, and okay, let's lock the trade. We just need one trade like this. We're good for the whole week. What you want to say this trade? Just patiently wait for the setup, my friend. You got it. Man. Patient payoff. Alright, let's get it done. Order block. Fair value gap. Retest. And this is a long setup. Okay, what the condition for the setup? I mean, rule engagement. We need a sell side liquidity was taken. But in this case, even better than that, what we have buy side liquidity trap. Okay, twice. See that? 1, 2 times, right there, twice. And it come back and retest exactly that, and boom, make another leg up right there. You see that? That's how the liquidity run. That's how the algo run right there. So the rule engagement for us to go long whenever we see a sell liquidity was taken. But the bonus or the more conviction for us when we see the buy side liquidity was trapped. That's where we know that the high properly set up is forming for us right there. And we have 2 entry time. So we have order block, form at the 09:31, right? Then we take entry time is 09:46 or 09:52. Beautiful right there. And now our target just 5 cents below the swing low right there, right? Target is just the swing, yes, the price swing low. Price swing low right there. And what is our okay, no, I mean right here our stop loss. Alright, and our target is gonna be London buy side liquidity. We either London high, right? Yeah. Or the order block right here, this order block, there is order block on the high time frame. Yeah, that's it. It's a beautiful setup. Either enter right here and our targets are below here. And then a stop loss, our targets up here. Yeah, let's put into our journal. Oh, 43. Yeah, paragraph. Retest. Yeah, one more thing that give us a confluence on this long setup is the diversion. Right. The smart money diversion. Want to show real quick. I think we did go a little bit early this morning. Why is this one? So we see that at 9:45, the SPY make a higher low, while the QQ make. Hold on, is that right? $45. Low. No, 9:30. No, 11:30. Isn't it right here? Yeah, 11:30. 10. Yeah, right here. Okay, so let me go at 9:45 right here. The SPY make a high low, but the QQQ make a low low. So that's the diversion right there. It got a signal. It gives a signal that you go in and go long and on the SPY right there. So 45 right here. You see that? So that's the confluence we have with our long trade right there. Long trade around 45 right there. So we go in at 46 right there. And if we're late, we can go in at 52. All right, I think that's it for today and for this week, and have a nice weekend, and talk to you later next week. Bye bye for now.